Coming up in today's episode, we'll be digesting all the PMI numbers from across the globe and currencies, as well as any other economic data that you need to know, as well as geopolitical risks with the American elections coming up. How will this affect the market? All this and more with Bob Mason of FX Empire. This is your week ahead. Hello, Bob. Good to see you. Thank you for joining us again. Let's dive straight in, shall we? How's it looking on the economic calendars for next week? What can our traders expect and what should we be looking out for?
Yeah, it's quite a week on the economic data front, but there's certainly some stats to consider. From the US, from the EU and from the UK, we've got private PMI numbers for September, the prelim numbers to consider. So, from the US, we're going to be looking, while we've been interested in manufacturing PMIs, we're really going to be looking at service sector PMIs from the US and from the UK for that matter. We're going to need to see a pickup in service sector activity, key to both economies. For the Eurozone, obviously it's France, Germany and the Eurozone PMIs. Both are going to be needing to provide support. So service sector and manufacturing sector activity needs to see a pickup after August's little blip. Any further deterioration or slowdown in activity and then expect the markets to go for the safe havens. Elsewhere from the US, we've got the weekly jobless claims figures and core durable goods orders on Thursday and Friday. From the Eurozone, consumer confidence figures for the Eurozone and from Germany on Monday and Tuesday. And then at the end of the week, we've got IFO business climate indicators for Germany as well. So those are particularly important when you're considering consumer confidence, spending, business investment, and the impact on the economies. Finally, for the pound, CBI industrial trend orders. The fact that there's not much data to consider in the week for the pound, we'll see some sensitivity to that as well.
So quite a lot of data to be looking out for next week and specifically keep a close eye on. But how about the Commonwealth Currencies, specifically Australia, Canada and the Kiwi? How are they looking for next week?
For the Aussie dollar, no material stats in the week ahead to consider. That leaves the Aussie dollar in the hands of geopolitical risk, obviously US and China, and market reaction to the prelim private sector PMI numbers from the US, the Eurozone, and the like. So expect those to be the key drivers for the Aussie dollar in the week ahead. For the Kiwi dollar, we've got trade figures, so that will garner some interest. Main event of the week, however, is the RBNZ monetary policy. After second quarter, the largest contraction since records began in 1987, we'd heard the RBNZ talk of negative rates, right? So we've had the worst contraction ever. So is that enough to deliver negative rates? Probably not, but expect the Kiwi dollar to be on the back foot. That precedes the trade figures that are due out later in the week. Finally, for the loonie, house price sector numbers are due out. That's not going to have any impact on the loonie. So expect crude oil prices that are going to be affected by the PMI numbers and general sentiment towards the economic outlook to be the key drivers in the week.
So this week, Japan has selected a new prime minister. How is that going to affect the Asian markets in Japan and also China? How's it looking there?
Out of China, there's no material stats in the week ahead to provide any direction or influence market risk sentiment. That leaves the PBOC in action. Loan prime rates decision at the start of the week on Monday. Markets expecting rates to be held steady. That's in line with the PBOC's forward guidance earlier in the summer. Economic data from China also suggests that the PBOC is going to stand pat, so there shouldn't be any surprises there or any impact on the markets. For the Japanese yen, got prelim private sector PMI numbers due out on Wednesday. There will be some interest definitely in that. Obviously, the Japanese economy continues to struggle. So will there be any improvement in service sector activity and manufacturing sector activity? Will that have any impact on the yen? Probably not. Politics and obviously monetary policy remain key for the Japanese yen for now.
And lastly, let's finish up on geopolitical risk. With the US elections hot on the horizon, Brexit also hot on the horizon, a lot of things to keep the markets active.
Away from the economic calendar, geopolitics is going to need to monitor that. We're approaching October, so presidential election fever should be picking up and should start beginning to affect the markets. There's plenty of chatter. Obviously, Trump's looking to distract the markets and voters. So he'll use any trick under the book to do that and try to narrow the gap on Biden. So expect some influence there. Obviously, you've got US and China. China's, Trump's target as one of his distraction techniques. So, US-China friction could be another area of focus. On the Brexit front, obviously you've got the internal market bill that's meant to go through the House of Lords in the week ahead. That could really ruffle the feathers of the EU and really raise the chances of a no Brexit deal, should that bill go through. That could really hit the pound, which found some support, after, Boris Johnson found some resistance about, pushing the bill through last week.
Well, that's all for today, Bob. Thank you so much for joining us. I'll see you again next time. That was the week ahead with Bob Mason of FX Empire. In the meantime, keep up to date with all the latest developments by following us on all our social media outlets.